Andrew, it's good to see you. So is PayPal kind of a problem for the broader, what do we call it, payment space?
Well, I think PayPal's a pretty specific case. And when we look at the bifurcation in the market between the legacy payment providers, and I consider PayPal a legacy provider, and some of the next gen digital competitors like Adyen, I think PayPal is struggling to maintain the power of its brand and relying more on unbranded or enterprise type processing solutions. And that's blending down the take rate, and it's blending down the margin, and more than I would have expected. And I was disappointed to see that it's going to take longer than I would have thought for the strategy to play out.
You know, the Wall Street Journal's reporting on this. A lot of people are talking about buy now, pay later, really having to face characteristics where the base, who, if they're not making payments, they're cut off from access to some of these products. They have to shop around. You know, they're going through their first down cycle. How do you think they're going to come out of it?
Well, I think when you look at PayPal, BNPL is a nice add-on. I don't think it's the key driver. It's much more important, obviously, for a pure play like Affirm. The big picture to me is whether or not BNPL is a legitimate tender type and whether it's here to stay. I believe it is. And I think the scarcity value that Affirm offers is really interesting, even more so than PayPal, which has got its own set of issues. You mentioned some of them: competition from Apple, competition from Shopify, other buy buttons are the major issues there.
Andrew, it's Dom. Is there a case to be made that the stocks so far this year have reflected a fundamental case for a tailwind? In other words, the banking crisis, the kind of more conservative nature of traditional banking has now made alternative or shadow banking a little bit more available and a little bit more kind of attractive. And is that the reason why? Because banks aren't doing as much of that business, so BNPL is filling some of that void?
Yeah, I think BNPL specifically, but I think more broadly, and we haven't necessarily seen this play out in the stocks yet, but I think over the next couple of years, what we're going to see is that the inability of traditional banks to serve especially younger consumers in a digital way is really going to accelerate the growth for alternative banking providers. Block, I think, is a wonderful example. You can see the strength in their Cash App performance. I think BNPL is another product that will serve as an alternative to traditional credit cards. This isn't going to happen overnight. There are cyclical issues. There are going to be some growth hiccups, which we've seen. But I think, yes, this banking crisis holds in stark relief the opportunity for alternative products like BNPL, like Cash App, like other solutions in the market.